You guys have been watching me. I always talk about where it is it that you want your family's money. Where do you want to invest your money? And I always tell people, look, real estate, multifamily real estate is the best investment vehicle on the planet to create wealth in, hands down. You know, but there's a reason why I say that because there's a lot of other investment vehicles out there. You may be in them, whether they're stocks, whether you're just saving your money in the bank, worst thing you can ever do. But I'll go through for me in comparison why I always said like if it's stocks, if it's retirement accounts, if it's Bitcoin, if it's your own business, if it's gold, like why real estate is better than that? Because a lot of times I beat up on those vehicles, but I want to go over why I say that. And I want you to compare wherever you have your money now, savings account, retirement account, Fidelity, Schwab, Vanguard, whatever you have it, wherever your money is sitting. I want you to weigh it up against this short list that I'm putting together, right? So up against what is considered multifamily real estate. All right. So the number one thing is your money in a place where your capital is protected. Like real estate, multifamily real estate is a real asset. So there is capital preservation, right? You guys have all seen Warren Buffett. He always says the same thing. Number one rule in investing, do not lose money. Number two rule in investing is don't forget rule number one, do not lose money. That is the number one rule of investing money. So capital preservation, preserving your capital has to be the top of your list as it relates to where your money is. So if your money is just sitting in the bank, not being deployed, it is losing value every day, period, through inflation. That is the what is it called? That is the phantom tax on the world. So if your investments and where your money's sitting right now is not preserving your capital, meaning that it's keeping up with or passing regular inflation, which I think right now they've got it somewhere around 3 and it's floating sub 3, and that's the concern right now for the Feds. Like if it's not doing that, you need to move it there fast as you can because as you continue to get older, like myself, I'm 50 years old, but since I've been alive, 86%, the dollar has lost 86% of its borrowing power since 1973. All right. So the next one is your investments kicking off cash flow. It has to cash flow. Assets cash flow. Liabilities take money away, right? There's debt on there that take money away. But you have to think about that. Where your money is it cash flowing? If it is, good. If it's not, that is a huge component of your decision-making process when you're thinking about creating wealth for you and your family long term. All right. So real estate cash flows. Some businesses do not cash flow. 9 out of 10 businesses in the US make less than $1 million a year, right? Some people make less than people who make two, $300,000 a year are still living paycheck to paycheck. So at some point, your investments need to send you cash flow. All right. Um, Dividends, whatever. Next, appreciation. Do you have long-term appreciation while it's sending you money or while it's cash flowing or generating some type of income revenue for you? Is it also going up in value over time? That's hard to do if cash is losing its value, it's not cash flowing, and oh, by the way, inflation on assets are also going down if they're not real assets, stocks and things like that. So you need to know whether there's appreciation, especially forced appreciation. In multifamily real estate, if you raise the rents, the values go up. It's not like a single family house. So all you people out there who are like, I'm going to invest in a single family house, that is not investments. Even if you were to file with the SEC to find out whether you're an accredited investor, if you only have your primary residence where you live at as your on your asset column, they're going to be like, hey, it excludes your primary residence. So whatever equity you have in there, you cannot count it. You can fight it, but they ain't gonna count it, man. That's not gonna get you hacked off on. That's not gonna get them to hack off on your little piece of paper. All right, next, leverage. All great assets, you can get leverage. Yes, you can leverage your stock. Most of the time you can't because you don't own enough stock. But multifamily real estate has leverage. What does that mean? For every dollar I invest in real estate, it buys me a $3 worth of real estate. Or for every dollar I invest, your dollar is worth $3 in a multifamily piece of real estate. That is the power of leverage in real estate with good debt, right? That's very important. If you take a look at any where your money's sitting right now, do you have good leverage on it? Can you get good leverage on it? Is it already being leveraged? Is it a multi? Are you invested in some form of a multiplier? Right? You can buy stocks. Whatever you pay for your stocks today is worth whatever your stocks are today. If it goes down, it's down. Look at that. I think that's an energy thing. They're all about energy right now because they're worried. But if you're in stock and your money's sitting in there, you can't leverage that. Whatever it's worth is what it's worth. All right. So next, it needs to be an inflation hedge. I talk about it all the time. Real estate, multifamily real estate, income producing real estate is an inflation hedge. Why? Because there's a rental income. Every time rents, the leases renew, you're going to raise the rents if you are a responsible real estate owner, especially if you got investors like me. I'm always like, hey, are we going to be able to raise the rents at our assets, because we need to make sure that we are hitting returns for our investors, which also needs to make sure that we are able to keep up with inflation. So it's a inflation hedge. Why? One, because it's a real asset. It's real estate is real. Stock's not real. It's not going to be able to keep up with inflation. Your cash is not real, is not able to keep up with inflation. It has to do all of this for it to be a great investment, at least to me. And not all of your investments are going to check the box on this list, but you want to check the box on the majority of them. All right. So the next one is it illiquid? If you can get it, it's at threat. If you have your money sitting in the bank, you can get sued. Somebody can take it. If you have your money sitting in a retirement account, I know they said, oh, nobody can go after it. They can. You do something bad enough, they're going to go after it. They're going to seize all of your assets, and your assets are sitting there. It's there, right? So if it's illiquid, they can't just take it. If you're an investor in a fund and you have a bunch of investors in there, it actually protects you from lawsuits, litigation, things like that. They're not going to pierce the veil, right, of this giant LLC with a ton of real estate investors in there, a ton of everyday real estate investors in this in your fund or your syndication. It does protect you as long as you aren't out there doing anything illegal, right? So take a look at your own investments. Do they do that for you, right? Are they liquid? Are they liquid? Could you get at them if you have an emergency or not? It's important to know that, because if they're liquid, it's probably not an asset. It falls along the line with cash. All right. And last but not least, does it provide you the tax advantages? Real estate, commercial real estate, has some of the best tax advantages of any investment vehicle on the planet. Yes, businesses and like, hey, you can do this and you can lower the taxes. There's huge tax benefits to this. You can write off this, you can get all these benefits. But the tax code for real estate owners in the commercial sector is some of the best tax advantages ever. You got depreciation, cost segregation, you have 1031 exchange, you have the write-offs for your mortgage, you have all of the benefits for being able to be in this investment. So like your investments need to have some type of major tax advantages, right? Most of them do not. You get a gain, you get hit with taxes. With real estate, you can get a gain and you get the pass through tax benefits of that. And sometimes you may not even need to pay any taxes on there on the money that you actually made. It's a loss. It gets shown as a paper loss. So your investors need to be able to check all these boxes all the time. Cash flow, appreciation. Do you have capital preservation? Can you get good leverage on your investments? Is all that stuff happening for you? What about is it an inflation hedge? Does it hedge you from the devaluation of your dollar, the lowering of your buying power? All right. Is it liquid or is it illiquid? Can you get after it today? Is there a problem and you go bang it? Or you'd be like, dude, I can't do that. I got to figure out another way to do it. I got to lean into my business and my company and generate more revenue here because my investments are locked up. I ain't touching them. Can't touch them, won't touch them. Boom, let's go. And last but not least, do you get the tax advantages of where your money is? See, real estate hits every one of these boxes. Stocks doesn't. Your retirement account doesn't. What else did we talk about in one of the other videos? That's another investment vehicle. Gold doesn't. Gold don't cash flow. It may protect your capital, but you can't cash flow it. You can't. It's illiquid, but at some point, it's illiquid for a reason, man. You have to dispose of that thing. You can't just like it's a heavy thing. You can't trade it, right? All of these things matter, right? So, but take a look at where your money is right now, where your investments are. We're talking about long-term investments. Where's your money sitting? Is it sitting in the bank? Is it sitting in a money market account? Is it in a retirement account? Is it at Schwab? Is it at Vanguard? Is it at Fidelity? Like, if you don't have any real estate, I got it. No big deal. But what I'm trying to do is convince you 100% that the best asset class for you to the best investment vehicle is real estate. Any one of these, right? And all real estate's not created equal either. Like multifamily real estate checks all these boxes, but single family houses, they don't protect your capital. They don't do capital preservation. Most of them don't cash flow, right? You're not guaranteed to appreciate. You can't force appreciation. It's based on the comparable sales. The house next door to you sells for less. Now your house is worth less. You have no control over that. So, but you get what I'm saying? Just take a look at your investments and be honest with yourself. Where are you at on this checklist, right? Does it do all these things? Because if it doesn't, then maybe you need to rethink where your family's money is going to come from long term. How are you building wealth? What are you using to build wealth? And I can tell you, commercial multifamily real estate is probably going to be the way for you to go. All right. So I hope this helps you. Go to bell-capital.com. You can see what we're doing. We have an accredited only fund. So if you're credit, meaning you make 200,000 or more a year, you know you're going to do that. You did it last year. You're going to do it again. Or you have $1 million net worth. We're here for you. That's how our fund is structured right now. But if you want, you can text 760-531-8500. Text the word deal, and somebody on my team will get back to you, answer any questions that you have. So that way you know what you're dealing with. We'd love to talk to you. We're here for you. That's what we're here around for. Like this video, share the video, comment on the video, give it a thumbs up or give it a thumbs down. Don't be a hater and a hider at the same time, but I am here for you. Subscribe to the channel, but take a look at your investments. Out of all of this stuff, does your investments check the box on most of this list that I gave you? It is important for you to know that, because later down the line, you want to know where your family's money is. And if you're looking to multiply money, you're a business owner, you're an entrepreneur, and you don't want to do that forever. You know that you want to build wealth. Knowing that you have a checklist to say, does it check the majority of these boxes? That is going to help your family exponentially. That is your duty to create wealth for you and your family long term. All right. So I'm here for you for that. Let me know if you need anything. Let's go. Boom. Are you an accredited investor with 300,000 or more liquid in the bank? I want you to come and partner with me. Look, if you love real estate, passive income, and positive cash flow, appreciation over long periods of time, and you're willing to be patient, come invest with me. Go to bell-capital.com. This is for accredited investors with 300,000 or more in the bank, ready to go. Come invest with me. Go to bell-capital.com.